Good afternoon, good evening, good evening. It's not afternoon, it's evening. Good evening. This is Noble Woods. We're gonna talk today about Google. I ain't gonna belabor the point. I ain't gonna do a lot of slow build up. Google is having reported supposedly, hopefully, a 20-to-1 stock split. So what does that mean? What does it mean for you? Where did Google come from? Why do they have a Google Class A, Class B, Class C shares? What does it all mean? What the heck is a stock split? How can a stock split? A lot of people are going to be excited about this. I'm excited about this. I was talking to a buddy of mine today, and he texted me. Actually, we were going back and forth on Voxer. It's like a little walkie-talkie app, you know. If you like me, you hate talking on the phone because it's just like you gotta agree on schedules and all that stuff. Just download Voxer, WhatsApp, whatever, you know. We were chit-chatting about some stuff. He was like, "Yeah, you heard about Google, right?" I was like, "No." So I Googled Google. Pow. Came up. Google is doing a 20-to-1 stock split. 20-to-1 stock split. So we're gonna talk today for a second about where Google came from, what that means, and keep it real simple, real practical. You got some kids, go get your kids. No, let me take that back. Middle school, high school, if they care about money, if they like money, I know they like spending your money. I don't have any kids, so I say stuff like that. And some of y'all probably like, man, my kids ain't gonna sit here and listen to you talk about no stocks. My kids will, though. They ain't gonna be listening to what. This is how you know it's the family business. It's the family business. It should be your family's business too. It should be It should be a part of every family's business. That's the thing. How else you gonna get rich? How else you gonna get wealthy? Real estate alone? I mean, that's great. Don't get me wrong. But this market, this is the most amazing thing we ever created. So anyway, let me pull some stuff up. If you hop on, if you're watching this, you can ask questions. You can feel free to shout out where you are. I'm here in Atlanta. So where you at? Let me know where you at. I always like asking to see where people are. I'm live on my Facebook page, my Insider Trading group page, my Limitless private page, my Limitless business page, and my YouTube page. And I'm about to add LinkedIn too. So I'm streaming live across the couple different couple different places. So let me take some of this stuff off. Hold on, let me do this real quick though, so I can see everything. Remove my little banner. Love this technology, but sometimes it gets in the way. So I got somebody watching from Cincinnati. That's what's up. Have I been to Cincinnati? No, I haven't. Is there anything in Cincinnati? What should I know about Cincinnati? I don't know anything about Cincinnati. Nothing comes up to my head right now. I ain't gonna even say this because I think it's what I think it is, but it might be something else. So y'all read it for yourself. Somebody said, "What up, Noble? What up, Michael? How you doing, brother? Good to see your face." I'm doing well. Oh, we in the Super Bowl. I probably should have knew that. You could tell how much I pay attention to football, right? And I'm gonna be watching the Super Bowl, and I'm gonna pick a team, and I'm gonna be all in for 4 quarters. Like I've been the biggest, the Bengals. Yeah, that's all I really know about Cincinnati. The Bengals in the Super Bowl. Dang. Okay. All right. Well, hey, look, I try to bring y'all this news so y'all, keep me balanced. I don't even know who in the Super Bowl. I know Google doing a 20-to-1 split though. I know that. I know that. All right. So let's dive in. And let's kind of go slow but have some fun too. Let me go to this site real quick. And let me take this down. And we're gonna look at some charts too. Let me start here for a second. If you don't know anything about Google, right, and you heard this today, and you're like, hey, I heard it was a 20-to-1 split. What does that mean? I don't really know much about Google. I know it's a search engine, right? So let me go back for 2 seconds. Which one of these sites is the one I want to look at? The history of Google is actually really interesting. It was created as a research project. Think about that, y'all. One of the biggest companies in the world was started as a research project. right? There was a search engine they initially called Backrub. Now imagine how terrible the stock would have done if it was called Backrub. Um, Google, who owns YouTube, YouTube was not the first technology to do what it does, to give you the opportunity to broadcast your message live in front of the whole world by posting videos. It actually, there was a company that was first to that space, but we will never ever hear about it. The company fell off. YouTube literally has taken over that space, right? So when you think of YouTube and like being able to present yourself, social media, your own channel, YouTube, right? There was another company, but the name was terrible. I'm telling y'all that just naming a brand, amazing process. And why did they come up with Google? Because Google technically is a one with like what is a one with 100 zeros, right? So it would kind of just putting a sort of a name that match what the company does. A Google is one with 1,000 zeros, right? And its search engine is amazing. It's technology, right? So it initially was called Backrub. That'd be weird. I don't know if I'll be talking about I'm about to buy some shares of Backrub. That's just a little weird. So anyway, and why do they call it Backrub? A node to these backlinks. Backlinks, right? That's kind of like how the original technology was based on these backlinks that determined how important each result was. All right, so it's one thing to get a result from Google, but how important is it? How many people are actually going to that site versus the site just came up, right? So it received their first round of venture capital in August of 1998. What the heck does that mean? Just consider venture capital. You got a company, it's private, you need to get some money funded. Venture capitalists are people who have, access to funds, and maybe they're in like a, they partner up with other rich folks, other people, other businesses, whatever, whatever. Just think of venture capital as what all the startups are looking for. Why? Because you come up with an amazing idea, all right? You getting it off the ground. Maybe it's an app, it's a research-based project, whatever. All right. You put you get the right networkings and connections. You gotta right aim to get some venture capital. It's capital, it's funding for your business, right? For this venture. Think of it like that. It's money for the journey because you're trying to take your small idea and make that research project a solid business, and you want to take that business, potentially you want to take it public so the whole world can buy shares and own some of it with you. And as the company does well, the people who are your subscribers, your customers will do well too, and the whole world gets the benefit. It's such a beautiful ecosystem when you really think about what this stock market is, right? So that's 1998. They were incorporated as Google in 97. They went public in 2004. So Google will be 20 years old in 2 years. Has not even been around 20 years. That's crazy. That's crazy. We act like Google's been here forever. It's only been around 20 years. It's a baby. It's a baby stock. It's a baby. And it's doing well. They went public on August 14th. It's what I call their birthday. So Google's birthday was August 14th. Let's see. They started off at $85 per share. $85 per share. The stock right now. What did we close at today? We close at today 27.57. 27.50. Let me do the math. Uh-oh. I'm sure you're gonna surprise. There we go. My homeboy was talking to me on Voxer. Times 100. So if you were able to go back in time and buy Google at IPO, you'd be sitting on a 3,200% return. 3,200, actually 3,243, 44% return. All right. It's done really well. Let's see. Michael said, I'm here about the money. Yeah, I feel that, brother. That's why I'm here too. That's why I'm here too. Okay. So 3,000% return. I'm gonna show you the chart in a second, but I want to give you some background information, right, on Google. And then we're gonna talk about these ABC shares, why they got three different types of shares. And then we're gonna talk about the stock split and what that means. It's a little tricky. This one, not this one, but what they've done in the past has been a little tricky because the owners have really been trying to keep control of the company, which is key. So we probably need to talk about a hostile takeover too. Carl Icahn comes to mind. We're gonna talk about what he does. Ooh, vicious, shrewd businessman. You got to know about Carl Icahn. You just have to. That dude's, oh man, just capitalism at its finest. It's war. It's warfare. It really is. Let me see. So let me go back. Went public at 85 per share. Let's see. Total market cap was 23 billion. We're gonna talk about market cap in a second. Stock price 5 years later went up to 230. There's a stat you need to know. If a stock gets to $100, it's like an 85, 90% chance it will get to 200 at some point. Why do I mention that? Because we know it IPO'd at 85, so it had to get to 100, and it got to 235 in the first 5 years. So for those of you who are, you're investing now, you're just getting into it, I want to give you those with one of my old favorite professors, Dean Davis at Clark Atlanta University Business School. I think he's still there. Hope he's still there. If not, amazing professor, stats professor. I love stats. I got an A in stats. I flunked it in undergrad, and then I took it again in the summer, small class, and I got an A. Statistics, Bollinger Band, standard deviation. I was learning stuff in B school that I didn't even know was going to make me a great investor and trader. The teachers couldn't connect the dots. So I want to just throw out little stuff like that so that if you like stats, man, you already got the foundation to really do this and take off. So the stock went from 85 and 5 years later, where's that number? It was $230, right? So it hit 100. It also hit 200. Soared all the way to 2000. It's had two historic stock splits. So we need to talk about what is a stock split. So fundamentally, to keep it simple, a stock split is just, let's say you have a stock, it's worth $100. There's multiple reasons. I'm gonna give you like my little layman's terms, what I kind of call it and think it is, and kind of teach this to my kids whenever I get the chance to teach kids. If the stock is $100 and you own one share, whoop-de-doo, you own one share. But if they do a 10-to-1 split, then they're going to give you 10 shares for every one share that you had. So you're going to take that 100 divided by 10. Now you have 10 shares equal worth $10 each. So you still have a $100 in value, but now you have more shares. So what does that allow you to do? Well, if you only got one share, guess what? You can't really sell it, and then like you can't take some profit off the table but stay invested. All right. So more shares makes it easier for what? It makes it easier for you to kind of get in and out of trades. You might say, hey, love this company, man. It just made me a 300% return. I want to sell some of these shares and I want to put some of these shares and take some of this profit and put it in something else. If you only have one share, you really can't do nothing. You got to get out of the whole investment or you got to stay in it. Right. So you got to have more than one share. If you're trading options, you got to trade more than one contract. Or you know what's going to happen. You're going to get stuck in a good trade. It's going to be up real big. You're going to want to take some off, but you'll have to take everything off or be at risk of waking up the next morning and you done got in a pullback or it's gap down. You was up 200% yesterday, and this morning you woke up, it's up 20%. And you feeling real silly because you only bought one contract. Same thing with shares, right? You need more than one share. The other thing is liquidity. Liquidity, what does that mean? The more shares that people can buy, the more we kind of, what I call it's like a Jedi mind trick, right? Because here's the thing, the company's still worth the same amount, but we magically do change the price. So right now the stock is roughly $2,800. $2,800. You take 2,800 divided by 20. What is that? That's $140. So if this were to happen tomorrow, you would wake up and be like, oh, how much is Google? It's only $140. The value's still the same. The company still has the same buying power. It's worth the same amount. It's not any more valuable per se. They just did a little Jedi mind trick to make you, look at price and say, oh, it's cheaper. And what happens when we think something's cheaper? It's more advantageous for us to buy. Another big thing from an options traders, y'all already know, if the internal volatility stays the same, hopefully it'll get even higher because more people are going to be attracted to it now, right? The contracts will be cheaper. Your options contracts will be cheaper. You look at a stock like Google, Tesla, anything that's worth like several $1,000s, hands down the contracts, in the money, at the money contracts, man, they're going to be pricey. They're gonna cost you. You're gonna be spending at least the G. You're gonna be spending at least $1,000 for one contract. But when they do these stock splits and the price comes down, guess what? The options contracts are cheaper too. Ooh, the contracts are cheaper too. Oh man, you should be excited. I'm excited. Okay, let me read a few more of these. Major acquisitions. So they bought YouTube for $1.65 billion. Such a smart purchase. Probably their best acquisition. All right, buying YouTube. YouTube has taken off. People still are developing content and planning on. I'm gonna get my YouTube channel started. I'm in the process of this is going to mine right now. Matter of fact, while we talking about it, I'm literally on Google right now, right? Because I'm on YouTube streaming live. So that's a little bit of that. Now, if you're like, okay, no, but you went kind of fast. I don't even really know all that Google does. So let me give you some basics. Google's market cap is total value. You take all this, the number of outstanding shares multiplied by the stock price, which is $2,757. It's worth $1.8 trillion. Where is that? Where is that? All right. In the hierarchy. So Apple. Oh, I hit the button. Actually, I did. Ooh, that was slow. Internet acting all slow. Apple is worth 2.8 trillion to give you a little comparison. And what is Amazon worth? What's Amazon's market cap? 1.5. So Google is worth more, technically speaking. Right? It's not a pure perfect number because we would have to like take out debt. You definitely had to look at debt when you're looking at the value of something. But this is just a kind of hardcore number. We love to look at market cap to get a better understanding of how powerful is a company. Small cap, little baby company just started, mid cap, large cap, or mega. This is a mega cap stock. All right. One of the biggest in the world. What's one more I can look at? Tesla. Tesla's 935 billion. Not at a trillion yet. And let's do Microsoft as one last one just to kind of give a comparison. So Microsoft is 2.3 trillion. All right. We'll go back to Google. Oh, Google actually changed its name to Alphabet. Right. So if you hear somebody say, man, I heard Alphabet did a 20-1 split, they're talking about Google. It changed its name to Alphabet. Most of us still call it Google, though. You still search and you search Google, right? You don't search Alphabet. That'd be kind of weird. So I think they were smart to do that. And they changed the name for a reason, but I won't get into that. So let's see. Profile. I'm on Yahoo Finance. The company, headquarters in California, its sector is communication services. That's really their core, their sector. What do? They're a communication services company. The industry they fall under that sector, internet content and information. Exactly what they do. You already knew that. If I had to go down here to read the description, provide online advertising services. Think about that. You know Google as a search engine. The description says they provide online advertising services. Google is where people like me and big brands spend money to reach you, to make sure I come up in search engines. In your search engine, if you were to type in who in Atlanta teaches futures, now I probably won't come up, but I do. And I live in Atlanta, right? So it's a business. Advertising, sales, everybody, I don't care what company you are, you can reach anybody, and they have such amazing analytics. You already know that. You should know that about Google, right? And they're in the United States, Europe, Middle East, Africa, Asia, Latin America, everywhere. Companies offer performance and brand advertising services, Google services, Google Cloud. They have multiple segments under that, right? So Android, the phones, YouTube, Google Maps, Google Play, the search engine, I said YouTube. So those are kind of like the big main things, right? So Google, even if you've never bought Google. So I want you to think about this for a second. How long have you been using Google as a search? I know before today, it probably was not that attractive to add to your portfolio or to think about buying. Why? Because it was $2,700 and some dollars. But guess what? Price is about to change. The price is about to change, right? So like I said, if it was to do the split today, it would drop down to $140. $140. It's a big difference. It's a big difference. Still a baby company. Hasn't even been around 20 years yet. Has not been around 20 years yet. Let me go back to my screen for a second. Actually, I'm gonna go here to the big one. Let's see, what else can I tell you guys real quick before I go? They've done so. Here's the thing: when a company does a stock split, it's actually a kind of, I don't want to say risky, but you got to be careful. Why? Because if you really want to keep a majority ownership, 51% ownership of the company, then you got to be careful. Why? Because somebody like Carl Icahn, I forgot you say his name. Carl Icahn. I'm gonna say Icahn. It sounds more bougie. It sounds a little more sophisticated. Carl Icahn is known for hostile takeovers. What's a hostile takeover? He'll come in and buy 51% of your shares, which gives him ownership majority control. He'll fire you as a CEO, get rid of your whole board, bring in his people, do what they feel necessary to bring the value of the business up, and then sell that business and make a killing. Oh, it's a dirty game. It's a dirty game. It's a dirty game. So, if you were to do the research and look at these stock splits, you'll find some interesting splits. They split 2 times before this third one, and hopefully will happen, right? They split on April 3rd, 2014. This says, let's assume a trader owned 1,000 Google shares before the split. After the split, they would now own 1,000 shares of the Class A and 998 shares of Class C. All right. So when a company launches and goes public, generally speaking, you only know about and can buy like the Class A shares, but they can have a Class B, Class C, Class D. What's the difference? Those other shares may pay different dividends. Like they may pay a higher dividend. They may be private where you and me can't even buy it, right? They may give you special voting rights that the Class A, those general shares, don't give, and that's what the thing is here, right? So the general class, which one is it? January 23rd, stock B. Where is it at? It's a 10-1. It's a 10-1. Where is it at? I'm trying to find it. I think it's the A and C. Let me see. One of them gives, if I'm comparing A and B, it gives you a lot more voting power. I'm trying to figure out which one it is real quick for y'all. Oh, here we go. Here we go. So there's a GOOG you can search for, and there's a GOOGL. What's the difference? Right. Centralized voting power. That's the thing. If you keep majority ownership and voting power, that's how you keep control of your company. It's why a company like Chick-fil-A will probably never go public. Because it'd be so many people. They would lose that ability to kind of privately run the company based on how they want to run it. It's a Christian-based organization, which is why they're not open on the Sabbath on Sunday. If Chick-fil-A went public and enough people and firms got in there and that main ownership was diluted, guess what? They probably would vote to do what? To make sure Chick-fil-A is open on Sundays. Forget the Sabbath, forget your Jesus. We need to see these profits, right? So it's a big thing. If you think about being an owner of a company, starting something small, growing it to where it's worth billions, you want to keep control. You do. Right. So these stock splits are not just, we did a little fun stock split so more people could buy it. No, there's a lot of decision making that goes behind this. There's pros and cons to the owners. All right. Let's see. So the Class B shares is saying here are still privately held. Let's see. There we go. So owning a share of GOOGL, which is the ticker symbol, equates to 1 vote. But if you own 1 share of the Class B, the private shares, it is actually 10 votes. So think about that. It's more votes. It's more votes. And think about how crazy that is for a second. Like, imagine if we're talking about like presidential elections here in the country. Imagine if certain types of voting, there was different like blocks of voting, and your vote only counted for 1, but mine counted for 10. It's power. It's like dynamics of power. Very interesting stuff. Just dynamics of how power and control really work. All right. Let me go back. Pop this back up. Let's see, what else do I want to share real quick before I show you guys a chart. Without wanting to up the voting power of Google shares, the company sought out a way to lower prices. Let's see. They couldn't have both. They couldn't have both through normal means, so the company instead created GOOG as a whole other class of share. Okay, so there you go. So the GOOGL looks like was first. Well, we generally know the GOOG came right because they did the split. They wanted to create an entire different share. The GOOG shares don't come with any voting rights. These are the Class C. So think about that. There's a Class A Google. There's a Class B, Class C. Class C, GOOG, no voting rights. No voting rights. None. You don't have any voting rights. The Class B, you got 10 voting rights. The Class A, you have 1. All right. And let's see. Interestingly enough, the stock splits are both represented on major indexes such as the Nasdaq 100. I think Google is in Nasdaq 100, S&P 500, and it's probably in the Dow too. I don't really look at the Dow that much, honestly, but we're gonna look at it in a second. So yeah, so that's about it for now. That's about it for that. See, I ran through some of those. Oh, they crushed earnings too. So let's do that. Let's take a look at the chart now. How about that? Let's take a look at the chart. At the chart. Pull this up. I'm gonna take everything off for a second. Clean chart. I'm gonna put these on the month charts. If you can't read candlesticks, don't worry. It's real simple. The basics of it are really simple. Let me just take some of this stuff off because I don't want all of this information on here. All this corporate stuff. Price, equities, corporate actions, I want off. Okay, there we go. Clean chart. So this is Google going all the way back to 20. This is the GOOG. See? Go to the GOOGL. There we go. Matter of fact, let me see. If I just type in Google. I'm in Thinkorswim. TD Ameritrade owns this platform, by the way. So if you type in GOOG, a couple things come up. Alphabet, CLC. So that's Class C. The GLA is the Class A. And then you got good old GOO. Oh, G is the C. I'm sorry. G is the Class C. All right. So generally when you type it in, GOOG. That's probably what most of us know Google by. All right. So this is those first. This is from 04 to 08. Those first 5 years, the company was cruising. Look at that uptrend. All right. And then this was the recession of 08. Recession of 08. All right. So the recession happened. How long did it take price to get back to the highs, right? Before the recession, how long did it take to get back there? It actually took 48 months. So it took 4 years. The recession, think about that. The recession of 08, from the high to the low, was 1 year. 1 year of pain, 1 year of bad. Subprime mortgage, housing crisis. Prices on Google dropped from 370 and went all the way down to 123. And it took 4 years to get us back to 370. How have we done? How has Google performed since then? Amazingly well. It's gone from $370, right, all the way up to, looks like, what year was this? 2018. Reached 1,200. Before COVID, we were at 1,500, and then this is COVID right here. Let me put a box around COVID. So these 2 red months, this was COVID. This is the market. This is Google reacting to COVID, right? But how was it done since then? Since these lows of COVID, stock has gone up 200%. That is amazing. That's amazing. That's a strong company. If I was to show you really quick, Nasdaq, QQQ, Nasdaq has done really well. All right. So you want to really be invested in companies that are doing well when the stock market does well. I don't know. People make this so complicated. All right. If you pull up a company and it doesn't look like this, I don't know why you in it. I mean, it's hopeful, but you want to be a great trader, trade the greatest stocks. All right. I could do the same thing with Apple. Curve looks the same, right? If I look at the S&P, look at the S&P. Same thing, right? Dow Jones looks the same, right? Dow was up. Everything's up. The Dow is up. The S&P is up. Nasdaq is up. Now we just had a bad month or two, but I mean, still everything is up so high. It's a little pullback. What does it really mean? All right. In the greater scheme of things. So Google's a really strong company. Let me look at real quick what it's done just the last. Let me take all this off my charts for a second. Let me add a little bit of information here. Don't worry about this. You probably got a little, if you're brand new, you're like, oh, what did he just do? Okay. So for those that know, we just came down, went a little bit under the 200 period moving average, which was roughly at we bounced pretty nice. We hit it here right here this day. We hit the 200 and we ran right back up to the 20. Squeeze was bearish. Y'all already know if you know me, man. That's an easy short puts if you wanted to play that side. If not, okay, that's cool too. Got back above the 8, right back in between the 8 and the 20, sitting at the 200. We had a nice move up today. A nice move up today. If we get back to the highs, that's 30, 37. So let's pretend we get back to the highs at 30. Let me just say 30, 40. 30, 40 divided by 20. Oh, wait, 30. 30, 40 divided by 20. That's $152 per share. $152 per share. That's crazy. For one of the best companies in the world. Oh, that's crazy. I love it. I love it. That's crazy. I love it. Somebody said make it shareable, please. Oh, if you're talking about this actual fee, somebody asked me that before, and I looked at every single option. I'm gonna have to actually contact the company because I don't know why when I'm live I can't share it. I can share any of my stuff after it's live, but I don't know. It's weird. So I appreciate that whoever said it, because I definitely try to educate and just help do my part as an educator. Somebody who's been in this for a minute, help you guys to understand what's happening and just to see these opportunities. So I've been on 30 minutes. That's really all I wanted to do. So check this out. I will say this real quick. I just launched today. I do got to say this really quick too. I launched 2 new live courses. Two. So you got 3 weeks. February 22nd, I'm doing a 7-week live options course. If you do not know how to trade options, you don't know how it works, you don't understand the Greeks, you don't have any technicals, what I just pulled up, all that confuses you, man. I don't care who you are. I'm sorry. I'm gonna keep saying this. Options is one of the best things, most influential. Most impactful things that you will ever learn that can help you to make money. I don't care what your degree is. I don't care what your passion is. You're in this economy. You buy stuff. You Google everything. Why not own the company? And so many people came into the market. Let me tell y'all what happened. Recession '08, millions of people said this investing thing don't work because I lost too much money. Oh, it doesn't work. Do y'all know when factually when what the data shows when a lot of this volume people buying came back into the market? In the last 2 years. Why? Because of COVID. Because we were all trapped at home and you saw people making money who didn't know what the hell they were doing, and you got real excited and you started making money or trying to, and a lot of y'all jumped in thinking options was easy because you hopped on Robinhood and it's easy to place that trade. But the market's been going straight up for 2 years. So honestly, if you've been struggling in this 2 years, easy, the market going straight up, what you think is going to happen when we kind of come out of this and then you really have to actually know how to trade to make money? It's going to be tough. The same thing is going to happen at what happened in '08. A lot of people are going to leave the market and say, man, I remember trading during COVID. Yeah, man, I remember trading during COVID. Woo, it was fun. I was killing it then, man. Right? It's going to be a memory. It's going to be a thing of the past. You need to learn and invest in this. Not because I teach it. I don't care whose class you learn from. I really don't. I don't. But you need a mentor. You need a community. You need a solid education because this is education. You can't learn futures options, crypto. It's an intellectual thing. Like this is an intellectual type of asset. It doesn't exist, but it does exist. These companies exist. And crypto, we could go into a conversation about whether it exists or not. But either way, it's making people money. It's providing for their family. It's paying bills, right? So this is just too important. It's too important. It's one of the most important things you'll ever learn. And you buy from companies and will for the rest of your life. You're a part of this economy. You're either going to be an investor in it or you're just going to be a consumer. And people like me are going to love that. Let me say this the right way. The investor in me loves that you consume the companies I buy. Why? Because I literally own shares in them. I feel like I own the companies. When I walk in Apple like I own Apple because I do. Now, I may not own billions and millions of shares, but whatever I own, it's mine. I can pass it down to my kids. When I get married, I could give it as a gift to my wife. I can write these shares into my will. Telling you, y'all, man, y'all better get serious. So I got two live courses coming up. One is a 7-week options course. The other is a 7-week futures course. If you don't know what futures are, go to the website, limitlessclass.com. Dig around. I got a bundle pack if you want to get both. Ooh, 7 weeks with me with both. Oh man. It's life changing stuff. It really is. For those that don't know me, I'll say this real quick. I was working in corporate 10 years ago at Bank of America. I got my MBA from Clark Atlanta. I was making 6 figures. I got heavy into futures trading. I got obsessed. I was investing. I got obsessed when I learned about futures. I'm like, what the heck is this? I started paper trading on a practice account for 9 months. I was terrible at first. I could not make any money. I learned. I kept learning. I kept practicing first. I got to where making money was pretty easy. My dad passed away unexpectedly. Left, me and my sister a little bit of change, as he would say. I took that money. That was my first account. That's why I'm here. It's literally why I'm still here. I fell in love with the markets. I fell in love with teaching it. And my part of my passion and purpose is to literally help more people to understand this highly complex, sophisticated thing. Because once you get it, it's like driving. You got it for the rest of your life. Driving was really nerve-wracking too. The first time you got on the highway doing like 80. Why? Because you could kill yourself if you didn't know what you were doing. But now that you can drive for the rest of your life. This is the same thing, right? So you got to invest the time. It's critically important for you and your family. You can only really build wealth with starting a business. If your business blows up and does like a Facebook thing, okay, cool. But that's right, very, very small minority of the country. I actually look at owning shares as ownership. I look at it as another form of entrepreneurship because you're owning a business. You didn't start it, but you still own a business. When you own shares of Google, you still own Google. Or it's real estate. So it's really the two big keys to wealth: real estate and these intellectual assets, right? Crypto, foreign exchange, futures, stock. You can trade options on stock. You can trade options on futures. Welcome to reality. There's no other way to make 1,000% in 2 days. How else you gonna make 1,000% in 2 days? Most options trades, I mean, honestly, I'm up at like 100% in like the same day or the next day. 100%. We talking about being able to double. Now, don't get me wrong. You're not just putting your whole account in there, doubling your money every time. But what else gives you the connection to the companies you love? You own Facebook watching this. Do you own Facebook? You ever traded Facebook? You Google every day. Do you ever, right? You ever thought about owning, buying, trading, Google, right? iPhone, like all the best companies we buy. And when I say we, I just mean Americans. We love to consume. We're so materialistic. It's okay in a sense. In a sense, it's okay to like love buying stuff. Okay, you just love buying stuff. I get it. Retail therapy. I understand all of that. But when you align that with being able to not just buy Apple or get on Google to search, but to also own Google shares long term, or even just to be able to trade them through options, it's life changing stuff. It is. So, if you need a great class from somebody who's passionate with a proven system, with a lot of folks who definitely have rock with me over the years and have gotten some really strong results, and I'm here. I'm here. Thanks for watching. I'm gonna talk to you guys later. That's about it. Do your research. Learn some more. I ain't tell you everything. I ain't tell you everything I could have told you. But if you know, you know. If you know, you know. Once again, go to limitlessclass.com. That's the website. You can find out and read all the information. I got several videos of all the information about the classes. Oh, I didn't say price. Let me say the price. It ain't no tricky thing with me. The options course is $749, under $1,000. That's crazy. I really don't think you understand how crazy that is for a 7-week detailed class with me for $750. The final class, the digital version I'm working on that'll come out a little bit later this year, it's gonna go up. So I'm increasing prices, but I like to give people really, really big discounts. I know it's worth way more than that, but I want you to be able to afford it. For now, I can always do. Plus, I can trade. Right? So take advantage. It's only $750. I also give you payment options. You want to split it into 2 payments? Split it into 2 payments. The futures class, futures is a little bit more intense. Intense ain't the best word. It's a different ball game. If you really get in there and master futures, man, you can do some crazy damage. And the big difference for me is I have to teach the technical side, the charting and the tools I use on futures. They a little bit sharper. I gotta like right. So if you take my futures course, it actually would make you a better options trader. But the options class alone, you'll be able to do some work for sure. I want to help you start your career. Think about what I said, career as a trader, not a little hobby, not a little fun experiment for those that are serious. I quit a six-figure job to do this, to trade and continue to teach because I knew I had a passion for teaching. All right. So that's what it is. The futures class is $14.99. Right. So it's 1,499. And then if you want to, you can get both. 7-week courses, about 40 hours of content each class. Neither one expires for a year, so you'll minimum have a year. When I redo and kind of finish the finalized digital versions, I'll transfer you over. You'll get the newest, best with all the little updates, little study guides, just more teaching tools built in. Right. The bundle's $19.97, so it's under $2,000, but you're gonna get powerful futures and options teaching. So no stress, but you need it. You probably do. I'm sure you do. I needed it. I kind of try to always develop and create the classes that I wish I could have taken years ago. Right. That's my goal is always to give you what I didn't have and to make it really good. Right. So if you enjoyed this, you'll love the classes. Somebody said, thank you, Joel, which means they didn't read my name down here. I'm Noble. I'm not Joel. Joel's my cousin. My partner in crime. We used to trade futures together every day for like 2-3 years in the trenches when we really didn't know too much. We traded on the 5-minute chart and the 15 and the 1 minute and the hour and the 10-minute. And we used the MACD and stochastics RSI, the relative strength index. And then we went over to the Willie percent R, and then we used the Heikin-Ashi. All right. If I just tell you the stuff I don't use, I could teach you a ton. All right. So anyway, having some fun. That's about it. Have a great day. He's the real deal. Yeah. Yeah, I am. I love what I do. I really do. And I'm an intellectual. I'm heavy on reading. I'm heavy into debates and healthy dialogue, and I'm very logical. I love breaking this stuff down. And I teach kids too. All right. So talk to y'all later. Have a great night. Check out and keep learning more about Google. Maybe you want to think about putting it in your portfolio. Maybe you just like me. I'm not about to add it to my portfolio. I just want to start trading options on it. So I'm waiting. We're going to see if it happens. Hopefully it will. But Google at $140? Man, that sounds good to me. That sounds good to me. I'm out. Thanks for watching. Share this with somebody that you know and that you love after I click the button and go off. You can go back to wherever you watched it. Share this with somebody that you just want thinking. Your wife, your husband, somebody in your family, somebody. You can't do this money thing alone. Do it with somebody else. Do it with a team. All right. Do it with your family. That's what you're supposed to do it with. Who you're supposed to do it with, because that's who it's for. Talk to y'all later. Peace.